Good morning, students. Welcome you all once again in the lecture of Ind AS 105. So, students, we will be completing this Ind AS 105 today. This is one of the short and sweet standard, I would say. Very simple standard. The only thing is you have to stick with the fundamentals. You have to remember the concepts properly. Otherwise, the standard is very, I would say, simple. And this standard is very straightforward kind of a standard. Students, in the next 5 minutes, I will recap the last class. I will recap all the concepts, and then I'll move on to the today's concepts, right? So friends, yesterday we started this Ind AS 105 and I told you non-current assets held for sale and discontinued operations, right? I told you this standard is applicable when a non-current asset is held for sale, okay, and discontinued operations. So this standard is not applicable when a current asset is held for sale. For example, inventory. Inventory by nature is held for sale. Okay. So objective, we discussed that this standard talks about the accounting for asset held for sale and presentation and disclosure of discontinued operations. We also talked that the classification and presentation requirement of this Ind AS 105 applies to all recognized non-current asset and to all disposal group, which is group of assets. Okay. But the measurement requirement of this Ind AS applies to all recognized non-current asset and disposal group except some scoped out asset. For example, deferred tax, asset arising from employee benefit, financial asset, biological asset, contractual asset, and an insurance contract. These assets has to be measured as per their respective standard, not as per Ind AS 105, even if they are part of the disposal group. Friends, we discussed that the current and non-current classification authority is with Ind AS 1. But this Ind AS will reclassify a non-current asset into a current asset only when it meets the held for sale criteria. When it meets the held for sale criteria. And friends, we discussed in this standard, there are three aspects. Number one, individual asset held for sale, which we call it as a non-current asset held for sale. Then we have discussed that this also talks about the group of asset held for sale, which is a disposal group held for sale. And the third one is discontinued operations, right? This standard talks about these three aspects. Okay. So this term refers to an individual asset or group of asset. Okay. So group of in individual asset held for sale, the individual asset must always be a non-current asset. The group of assets may be a combination of non-current asset, current asset, and liabilities. Okay. And friends, we discussed that this non-current asset held for sale or disposal group asset held for sale, disposal group held for sale, right? The future economic benefit, the primary objective to receive the future economic benefit is to sell the asset, not to use the asset, right? And when an asset or disposal group will be classified as held for sale, when two criteria will be satisfied. What are those two criteria? ISPC plus HP. What is ISPC? ISPC is Internet Service Provider Company. No, ISPC is it should be available for immediate sale in present condition and sale is highly probable, right? Sale is highly probable. Immediate sale in present condition means the seller should have an intent and ability to sell the asset. Okay. And what is meant by sale is highly probable? Sale will be considered as highly probable when management is committed to a plan to sell the asset. Okay. When active program to locate, to search a buyer has started, the asset has been marketed or the price quoted is reasonable in respect to market value. It is likely that the sale should be expected to complete within 1 year, except the circumstances outside the entity's control. And we also discussed that it is unlikely that the plan will change, right? Friends, the asset will continue to be shown as a non-current asset or disposal group held for sale. Even if the sale will be delayed, it will extend beyond 1 year, it will still be continue to be shown as a non-current asset or disposal group held for sale only when it is due to the situation beyond the entity's control. Okay. When it is due to the situation beyond the entity's control. For example, due to the natural calamities, COVID, okay, or due to some, regulatory angle, okay, due to some government announcements. So if these are not in the control of the entity and the delay is there, so of course the delay is acceptable. Or if a binding agreement has been entered with the buyer and the delay is just because of some wish of the buyer, then also that delay is acceptable, right? And in that case, the non-current asset held for sale or disposal group held for sale will continue to be classified as a non-current or disposal group held for sale, right? Sir, in other cases, what will happen? In other cases, if the entity is not able to sell the asset within 1 year from the date of classification, it has to again take back to the normal asset as a non-current asset. Okay. So this is what we discussed. A lot of examples we have covered, right? Okay. So friends, then we discuss the concept of abandoned asset. Abandoned asset are those assets which will be used again in the business when the demand will picked up, right? So normally these assets, abandoned asset मतलब छोड़ा हुआ asset. Abandoned asset are those assets which are not in the use, okay, which have been packed up and kept in the business for the purpose of future use, right? It is not held for sale. It is not available for sale. Okay. Then we discussed that, you know, when an asset will be classified as held for sale, then it has to be measured at lower of carrying value as per the respective standard immediately before classification is held for sale, right? And fair value less cost to sell, whichever is lower. So this is what we discussed. And friends, we discussed that subsequently, we discussed that subsequently, the asset has to be remeasured at fair value less cost to sell. If fair value less cost to sell will decline, you are required to take the impairment again. But when the fair value less cost to sell will increase, you have to take the increase to the extent of previously accumulated impairment losses, right? If you have previous impairment losses, so you can take your increase in the fair value less cost to sell to that extent only. I have discussed one example in the Excel file in the last class. Okay. So this is what we discussed. Let's discuss quick question. What is meant by non-current asset held for sale? Non-current asset held for sale are those assets where the future economic benefits are principally recovered through a sale transaction, not through the continuing use. What are the criteria for classifying the asset or disposal group as held for sale? The criteria is that asset or disposal group should be available for immediate sale in present condition and the sale is highly probable. Whether asset temporarily taken out of use is termed as abandoned or classified as held for sale. It has to be termed as abandoned asset. What are the measurement provision for assets which are classified as held for sale? The asset which are classified as held for sale has to be measured at lower of carrying value on the date of classification is held for sale. Okay, just before the classification is held for sale, and fair value less cost to sale on the date of held for sale, right? Whatever is lower, so that value will become the value of non-current asset held for sale. At the time of remeasurement, so the non-current asset held for sale or disposal group has to be remeasured on the basis of fair value less cost to sell on the reporting date, right? If the fair value less cost to sell is declined, then you need to again take the impairment in the P&L. If the fair value less cost to sell has increased, you can take the increase only to the extent of previous decrease, previous impairment losses. Previous impairment losses means impairment loss when it was PP plus impairment loss at the date of classification is held for sale. Okay. So the unadjusted impairment loss in the lifetime of this asset. Friends, now to summarize this concepts again, I have a case study 1 and the similar case study is also given in the institute study material. So let's discuss this case study 1 to understand our understanding clearly. So I can see in the meantime, a lot of students have joined. So good morning, Abrikesh, Anila, Tushar, Mamta. Then who is there? Niranjan, Nisha, Ginny, Pooja, Sanya, Sumit, Vignesh. Good morning, everyone. Let me see the portal also where the people have joined. Good morning, Rahul, Radhika, Ridhmi. Good morning, everyone. Yes. Friends, let's discuss this case study quickly. Okay. And just see how I am reading this case study and how I am answering this case study. You guys need to answer with me as well. Okay. A property is purchased for rupees 5 lakh on 1st April 2018. The useful life of the property is 20 years, zero residual value. The property is measured subsequently at depreciated historical cost. What does it mean? Cost model. What is the value of the property? 5 lakh. What is the life? 20 years, useful life. Zero residual value. What is the per annum depreciation? What is per annum depreciation? Good morning, students. What is per annum depreciation? 25,000. Very good. So on the date of purchase, accounting entry is this property building PP account debit to bank account 5 lakh rupees. And since 20 year is the life, so every year 25,000 is depreciation. On 30th September 2020, it is decided that the property is to be classified as held for sale. On 30th September 2020 means after how many years? 1st April 18 को प्रॉपर्टी परचेज की थी, 31st March 19, 31st March 20 एंड 30th September 20. आफ्टर 2.5 years, 2.5 साल के बाद, after 2.5 years, it is decided that the property is to be classified as held for sale. So you need to charge depreciation for 2.5 years. So what is the depreciation? Every year debt to ECDEP, debt to ECDEP 25, and this is for half year. So debt to ECDEP 12,500 for half year. So what is the total accumulated depreciation up to 30th September 2020? Yes, 62,500. Very good. So on 30th September, it is decided that the property is held for sale. So what to do now? You have to compute carrying value. Carrying value on 30th September, H per Ind AS 16 and fair value less cost to sale. So in the next paragraph, this question says that an impairment assessment on 30th September 2020 determines the recoverable value based on value in use to be rupees 4 lakh. What is the concept of recoverable value? Ind AS 36, impairment of asset, which is applicable to Ind AS 16, 38, 40, right? So on 30th September 20, an impairment assessment determined the recoverable value based on value in use to be rupees 4 lakh. The fair value less cost to sell as on 30th September 20 is 3,90,000. What is the use of third paragraph? What is the use of the third paragraph?
For impairment loss computation.
For impairment loss computation. For impairment loss computation of when? Of which asset? ये कहाँ यूज होगा? इम्पेयरमेंट लॉस की कंपटीशन के लिए जो भी नंबर आएगा यूज कहाँ होगा? ये वेयर दिस नंबर विल बी यूज्ड?
ये क्लासिफिकेशन होने से पहले जो प्रॉपर्टी थी पीपीई, उसका इम्पेयरमेंट कंप्यूटेशन पहले होगा, उसके बाद में उसको हेल्ड फॉर सेल
वेरी गुड,
क्लासिफाई किया जाएगा.
वेरी गुड, वेरी गुड, वेरी गुड. So before classification is held for sale, you need to compute the, forget about held for sale. Forget about held for sale. Okay. If you are a listed company, you are closing your books on a quarterly basis. You are reporting your results on a quarterly basis, right? If you are a listed company, you are reporting your results on a quarterly basis. Am I right? So if you have to report your results on a quarterly basis, and on the 30th September, you need to compute the carrying value of this property. So what is the formula of carrying value? What is the formula of carrying value?
Cost less depreciation less impairment loss.
Yes, very good. So always remember, the formula of carrying value is not cost minus depreciation. The formula of carrying value is cost minus accumulated depreciation minus accumulated impairment losses. So one thing is very clear in mind. Whenever you compute carrying value, you have to consider that impairment also, right? The only thing is you will charge impairment only when there is an indicator of impairment. You will do the impairment testing only when there is an indicator of impairment. But from the question perspective, from the exam perspective, the question will give you the impairment. The question will indicate the impairment, right? You have to just behave like, what word would I say? Behave like that kind of a Hans who can just pick the pearls, right? So in this question on 30th September, there is a recoverable value is given based on value in use to be rupees 4 lakh. It means your cost is 5 lakh. minus accumulated depreciation is 62,500. Okay. So 5 lakh minus 62,500. So this 5 lakh will come here. Just a minute. Just hold for a minute. Just a minute. I'm sharing the screen again. Yes, screen is visible now. Okay. This 5 lakh minus 25, 12,500. Okay. So 62,500. 62,500. So this 5 lakh minus accumulated depreciation comes out at 437,500. But recoverable value is 4 lakh. It means 37,500 is the impairment charge. Okay. This is clear to everyone. 37,500 impairment loss. So carrying value is 4 lakh. Now what is fair value less cost to sell? Fair value less cost to sell is 390. What is the value of NCHFS, Abrakesh? What is the value of NCHFS? Carrying value is 4 lakh.
3,60,000.
3,90,000. 390. Okay.
Sorry, 390. Sorry.
Yeah. So fair value less cost to sell is 390. The carrying value as per Ind AS 16 is 4 lakh. So whichever is lower. What is lower? 4 lakh or 390? 390 is lower. So you need to again book an impairment loss of rupees 10,000. What is the accounting entry? Accounting entry is property non-current asset held for sale account debit 390. 2. Property PP account debit credit. 2 property PP credit 4 lakh. And the difference will go to impairment loss on reclassification as NCHFS debit 10,000. So what is the total impairment loss booked in the life of this asset? There are 2 impairment losses.
47,500.
47,500. One, 37,500 when it was a PPE. Second, 10,000 when it was reclassified to NCHFS. So always remember, this asset has a potential. This asset has a potential of reversal of impairment loss of how much? 47,500. So subsequently, if the fair value, if this asset will not be sold out up to the reporting date, for example, 31st March 2021, then what happened? Then if the fair value less cost to sell will increase, that increase can be taken up to 47,500, right? Perfect? Yes or no? Yes or no? समझ आया नहीं आया?
Yes, sir.
Okay. Friends, now we have reached to the disposal group. Now we have reached to the disposal group. Okay. Let's understand the disposal group. Do I need to discuss the held for sale criteria for disposal group? मुझे डिस्कस करना है डिस्पोजल ग्रुप का हेल्ड फॉर सेल क्राइटेरिया?
No, sir, it is the same, sir.
It is the same. You remember when I was talking that the held for sale criteria, it was written that a non-current asset held for sale within bracket disposal group is those assets where the future economic benefit will receive buyer principally through a sale transaction rather than through continuing use. A non-current asset or disposal group will be classified as held for sale if it is available for immediate sale in present condition and sale is highly probable. Right? You are selling a factory building only. So same criteria. You are selling a factory with all the assets and liabilities. Again, same criteria. We need to see the measurement of disposal group. What is the measurement of disposal group? Again, same. Step number 1, compute the carrying value of the disposal group immediately before reclassification is held for sale. Then compute the fair value less cost to sell of the disposal group on the date of reclassification is held for sale. Okay. Then measure the disposal group at lower of carrying value and fair value less cost to sale. But if fair value less cost to sell has been lower than the carrying value, there is an impairment loss. So in the asset, it was pretty simple. If there was an impairment loss on an individual asset, you are just debiting that impairment loss and crediting that asset. But if there is an impairment loss on the disposal group, then how to allocate the impairment loss? Remember, just 3 days back, we discussed this.
Whatever balance of impairment loss will be there, we will adjust this first against from the goodwill and rest from the proportionate values of the other assets.
Other scoped in asset. Other asset which are in the scope of Ind AS 105. For example, inventory is not in the scope. Okay. Or so in inventory, I mean to say inventory has to be measured at cost or NRV, whichever is lower, right? Financial assets are not in the scope. So technically speaking, this disposal group is nothing. This disposal group is what? This disposal group is what? This disposal group is cash generating unit. This disposal group is cash generating unit. Cash generating unit. Okay. This disposal group is cash generating unit. And the allocation of impairment loss rule will be applicable to this disposal group also. So let's understand the measurement with the help of this example. Following details are given for entity A: goodwill, property, plant and equipment, inventory, financial assets, financial liabilities. These financial assets, financial liabilities comes under the purview of Ind AS 109. So these are the values which are given on 31st December. These values are in the $1 million. Under Ind AS, PP would be stated at $26 million and inventory is stated at 18 million. PP 26, inventory 18. What does it mean? It means the carrying values immediately before classification is held for sale are given. The fair value less cost to sale of the disposal group is 47 million. Assume that the disposal group qualifies as held for sale. You are required to show how the disposal group would be accounted for in the financial statement for the year ended 31st December 2020. 31st December 2020. Friends, let me know if you are able to understand the question. Let me know if you are able to understand the question. Are you able to understood the question? Question में disposal group की values दी हैं, property, plant and equipment, inventory की भी value दी है, before classification is held for sale, and fair value less cost to sale दी है, right? We need to understand what is the accounting treatment, how to measure this disposal group. Okay. So let me share my Excel file and let me solve this question. Okay. Please confirm if my Excel file is visible, friends. Please confirm if my Excel file is visible. Okay. Is it visible, guys? So we are discussing case study 2, disposal group. Okay. What is my step number 1? What is my step number 1? So carrying values are also given. Carrying values are given for this disposal group. What are the carrying values that are given? These are the carrying values which are given in for the disposal group. Step number 1, compute revised carrying value. Revised carrying value means carrying value immediately before classification is held for sale. यही था ना? यही concept था ना? Compute the carrying value immediately before reclassification is held for sale. So the carrying value for PP and inventory is given. PP, the carrying value is 26. Inventory, the carrying value is 18. For all other assets, carrying value is not given. So what do we consider? What do we consider? For all the assets, the carrying value is not given. So what do we consider, friends?
Same as given in the question.
Same as given in the question. Same as given in the question. We will consider same as given in the question. Okay. So we will consider this 16 for goodwill, 17 for financial assets, 14 for financial liability. So under step 1, the revised carrying value comes out at 63 million. What is my step number 2? What is my step number 2? Step number 2 is, what step number 2 is?
Fair
Step
value
number
less
2 is
cost to sell.
fair value less cost to sell. Okay. What is my fair value less cost to sell, which is given in this question? 47. 47. So step 1 is 63. Step 2 is 47. What is lower? What is lower? What is lower? The lower is 47.
47.
47. Step 2 is 47. So what should be my revised value of disposal group? What should be my revised value of disposal group? क्या होना चाहिए revised value of disposal group?
47.
47 होना चाहिए. My revised value of disposal group should be lower of step 1 and step 2. And step 2. So this should be 47. This should be 47. Okay. Now there is an impairment loss. So when it is 47, what is the impairment loss? What is the accounting entry? The accounting entry is disposal group HFS debit account debit 47.
सर
2. Yes.
सर फर्स्ट स्टेप में जो हमने रिवाइज कैरिंग वैल्यू अमाउंट निकाली है वो 63 के लिए इम्पेयरमेंट लॉस का भी दिखाना पड़ेगा ना?
वो जो रिवाइज कैरिंग वैल्यू हमने निकाली है वो इसने क्या बताया कि एच पर इंड एस 16 एंड एच पर इंड एस 2, राइट? सो एच पर इंड एस 16 पीपी की वैल्यू 26 मिलियन हो गई है. एच पर इंड एस 2 इन्वेंट्री की वैल्यू 18 मिलियन हो गई है, राइट? सो देयर आर रेस्पेक्टिव इम्पेयरमेंट्स इन द रेस्पेक्टिव एसेट्स. ओके, सो if question will ask you to pass the accounting entry, you can pass the accounting entry. Okay. For example, impairment loss account debit to PP 2 million. Okay. Impairment loss account debit to inventory 2 million. Okay. If question will demand, you can do that. I have not passed the accounting entry or I have not shown the impact because question में directly उसने दे दिया था number, तो मैंने यहाँ पे number उठा लिया. Okay.
Okay, sir.
If question will ask to put all the accounting entries, you can do that. Right. Disposal group HFS account debit to assets and liabilities account credit. How much is the credit? 63 million, right? I'm taking revised carrying value here, 63 million. Where the difference will go? Impairment loss on DG HFS debit. What is debit? 16 million. How this 16 million will be allocated? There is an impairment loss. So for computing this revised carrying value, what is the revised value of my respective assets and liabilities? There is an impairment loss. I need to allocate this impairment loss, H per Ind AS 36, because recently I have learned how to allocate the impairment loss on the CGU, on the group of assets. So I need to allocate this impairment loss of 16 million. How to allocate this impairment loss of 16 million? Standard says that for allocation of impairment loss, please apply the provision of Ind AS 36. Please apply the provision of Ind AS 36. And what Ind AS 36 says that? Ind AS 36 says that, 36 says the impairment loss on CGU shall be allocated to goodwill first, then pro rata to the other assets. And you remember, the standard also says that while doing the pro rata, you cannot allocate the impairment loss on a particular asset beyond its own recoverable value. Correct? For example, inventory तो by default ही cost और NRV whichever is lower पे होती है. So you cannot allocate impairment loss on inventory. Is that clear to everyone? Financial asset. Financial asset will always be at a market value. When you read Ind AS 109, you will be able to understand financial assets are always at a market value. You cannot allocate impairment loss on financial assets. Largely, Ind AS 36 applies to Ind AS 16, Ind AS 38, Ind AS 40 and goodwill arising in business combination. So where this entire 16 will go? Where this entire 16 will go? This 16 will go here. This 16 will go here. Okay. What is the revised carrying value of your assets and liabilities? This was the step 1 value. These are the revised carrying value of your assets and liabilities. Okay. These are the revised carrying value. I hope it is clear to everyone. I hope it is clear to everyone. So same step for disposal group also. What are the steps? Step number 1, compute the carrying value of non-current asset or disposal group as per the respective standard. Compute the fair value less cost to sell. Recognize NC, HFS or DG at lower of step 1 and step 2. Same. Right. Sir, what happened if instead of 47 million, the carrying value should have been 43 million? अगर 47 की जगह 43 होता तो क्या होता? Extending this example and considering the fair value less cost to sell to 43 million, क्या होता?
सर टोटल इम्पेयरमेंट लॉस 20 का होता था, उसमें से फर्स्ट 16 जो है गुडविल के अगेंस्ट लेते थे एंड बैलेंस 4 lakhs विल बी अगेंस्ट पीपी.
Very good. Really appreciate Pooja. Your concepts are very clear. Yes, step 1 is 43. Step 1 is 43, right? Step 1 is 43. What is my accounting entry? Disposal group held for sale account debit 43. 2 assets and liabilities 63. My impairment loss is 20 million. My impairment loss is 20 million. So 63 is revised carrying value. 43 is fair value less cost to sell. What is my revised value? 43 million. Okay. What is my impairment loss? 20 million. So where this impairment loss will go? 16 million will be to the goodwill and remaining 4 million to be the property, plant and equipment. This will be the 20 million. Okay. What are the revised carrying value? What are the revised carrying value? This plus these are the revised carrying. Okay. I hope this is okay. I hope this is okay, guys. Sir, in this example, right, let's say it is 20 million. The loss is 20 million impairment loss. But in the asset, it is not inventory, it is intangible asset. So I am further extending this example by replacing inventory with intangible asset and considering the fair value less cost to sell to 43 million, right? I am again extending this example, further extending this example by replacing inventory with intangible asset and considering the fair value less cost to 43 million. So let me copy this entire thing again. What I'm doing, I am replacing inventory with intangible assets. Okay. Accounting entry, disposal group held for sale 43, assets and liabilities 63, impairment loss 20 million. So this revised carrying value is 43 million. Lower of step 1 and step 2. My impairment loss is 20 million. Okay. How this impairment loss will be allocated? 16 to goodwill and 4
between PPE and intangible proportionately.
No, only property. PP.
Why not intangible, Abrakesh? It is intangible, na? I have just replaced inventory with intangible assets.
Can it be impaired, sir? Intangible.
Yes, intangible asset is subject to impairment. Ind AS 36 is applicable to Ind AS 16, Ind AS 38, Ind AS 40.
Okay, got it.
Okay. So minus 4 multiply by 26 divide by what? डिवाइड बाय 26 प्लस 18। 26:18 की रेशियो में इसको हम बाइफरकेट कर देंगे। -4 मल्टीप्लाई बाय 18 डिवाइड बाय 26 प्लस 18। So what is my revised carrying value? My revised carrying value is 43. I hope you guys have understood this entire allocation. This is nothing. This is cash generating unit allocation. CGU में impairment का allocation होता है वही है. As good as. Okay. Right? Perfect. I hope it is clear. Where are the other students today? I'm still waiting for the response from the other students. Where is Sumit, Vignesh, Anila, Nisha, Zini?
Yes, sir, clear.
Clear? Okay, very good.
In crux, we can say that first it will be adjusted through the goodwill, then balance amount will be adjusted to the PP and the intangible assets in proportionate ratio.
Friends, I would suggest and advise one thing. Whenever you will revise or prepare for exam, just prepare a summary. Okay, always prepare a summary. When you read this asset-based standard, Ind AS 16, Ind AS 38 intangible, Ind AS 40 investment property, Ind AS 105 non-current asset held for sale, right? Ind AS 2 inventory, Ind AS 23 borrowing cost, Ind AS 36 impairment of assets. All the concepts are interrelated. What we are discussing in disposal group, we are revising impairment loss allocation on cash generating unit. हम यही तो कर रहे हैं. If you listen my impairment of asset second day lecture, allocation of impairment loss on cash generating unit, and my second day lecture, which is today's lecture on Ind AS 105, allocation of impairment loss on disposal group, it is exactly cut copy paste. Same ही तो है.
Yes, sir.
Yes. Okay. So a student who knows how to allocate an impairment loss on the cash generating unit, he will be able to compute the impairment loss on this disposal group held for sale as well. Concept तो वही है ना. Compute revised carrying value, compute fair value less cost to sell. The lower will be the value of the disposal group held for sale. But lower का मतलब क्या है? इसका मतलब there is a impairment loss, right? If there is a impairment loss, you need to allocate the impairment loss between the assets and liabilities. There is no impairment loss on liability. Liability कभी impair नहीं होती. You need to allocate the impairment on assets. Okay. For allocating impairment, first you need to strike off the goodwill. If the remaining balance will be available, you need to allocate the remaining balance into the proportion of the assets. And remember, if the asset is already at a fair value, you cannot charge impairment loss on that asset. Inventory तो पहले से ही fair value पे होती है ना. Cost or NRV, whichever is lower. Financial assets has to be stated at fair value, right? ये concept तो हमने impairment of asset में ही पढ़ा था. Clear in mind or clear from mind?
Clear in mind, sir.
Very good. So we discussed this impairment of assets on disposal group concepts as well, right? Let me take you again to my PowerPoint presentation. And the standard is also talking about how to present this disposal group held for sale in the financial statement. So friends, the total assets of the disposal group has to be presented like this. Non-current assets and disposal group classified as held for sale, and the liability has to be presented separately. Liabilities directly associated with non-current asset or disposal group classified as held for sale. This is how this presentation has to happen. Okay, this is how it is going to be presented, right? Perfect. Now let me show you one balance sheet where the disposal group is there, and we will read the accounting policy also, right? मैं दिखाऊं आपको बैलेंस शीट प्रैक्टिकल एनुअल रिपोर्ट. Okay.
Yes.
Okay, just allow me a minute. I am opening that annual report of Hindalco Industries Limited. Have you heard about Hindalco Industries Limited? Listed
Yes,
company.
sir. Yes.
It's a big listed company. Hindalco Industries Limited. Okay. Yes. Hindalco Industries Limited, right? So I have already opened this annual report. This annual report is visible now. It is
Sir, I have
visible.
a query.
Yes.
Sir, if there is also the brands instead of the goodwill, then also the brand will be written off, impaired.
Ind AS 36 is applicable to Ind AS 38 also. Ind AS 38 talks about intangible assets. What are
Okay.
intangible assets? Intangible assets तो सारे ही है ना?
Yes.
Okay. So brand कौन सा? Internally generated brands cannot be capitalized. But if you are acquiring some company and you are paying a premium just because of their brand, in that case you can capitalize, right? But to cut a long story short, if there is a brand which has a value, right? So impairment loss has to be allocated to that brand also. Yes, so let me show you the balance sheet of Hindalco Industries Limited. I hope this balance sheet is visible. Okay. Assets, non-current assets, then current assets. Are you able to see this non-current asset, current assets? Can you see this
Yes.
non-current assets or disposal group classified as held for sale?
Yes.
Note number 15, 152 crores is the value. Previous year 110 crores. So non-current assets or disposal group classified as held for sale. Then there is a liability also. Let me show you the liability. So on the left side, there was a non-current liability. Then there is a current liability. Can you see this? Liability associated with disposal group classified as held for sale.
Yeah.
Yeah.
Yes.
Okay. So this is what the presentation is. And let me do a quick revision for all of you with the help of this nifty 50 companies annual report. Just a minute. Yes. Non-current assets or disposal group held for sale. Okay. Non-current assets and disposal group are classified as held for sale if their carrying amount will be recovered principally through a sale transaction rather than through continuing use. सुना सुना लग रहा है या सुना सुना लग रहा है? Is it something which is heard or is it something which is blank heard?
Heard.
सुना लग रहा है sir.
This condition is regarded as met only when the asset or disposal group is available for immediate sale in present condition, subject only to the terms that are usual and customary for sale of such asset or disposal group, and its sale is highly probable. Criteria for held for sale. This is the annual report, the practical real life annual report of a large listed company. This is not your study material. This is not RTP, MTP, question paper. This is nothing. This is the listed company annual report. You can see whatever you're learning in this class as a student, you will do all this task when you become a chartered accountant and join a company like a large listed company, right? So management must be committed to the sale, which should be expected to qualify for recognition as a complete sale within how many years? Within 1 year from the date of classification, right? Non-current assets and disposal group classified as held for sale are measured at the lower of their what value? Carrying value and fair value less cost to sell, except those assets which are specifically exempt under relevant Ind AS. Which one? financial asset, inventory, etc., etc. Once the assets are classified as held for sale, those are not subjected to depreciation till disposal. उस पे depreciation लगाएंगे क्या? नहीं लगाएंगे, right? Because the intent is not to use, intent is to sell. An impairment loss is recognized for any initial or subsequent write down of the asset or disposal group to the fair value less cost to sell, right? An impairment loss is recognized for any initial or subsequent write down of the asset or disposal group at to fair value less cost to sell. Initially, if fair value less cost to sell is lower than the carrying value, you have to recognize an impairment loss. Subsequently, if the fair value less cost to sell will decline, again you need to recognize the impairment loss. A gain is recognized for any subsequent increase in fair value less cost to sell of an asset or disposal group, but not in excess of any cumulative impairment loss previously recognized. What does it mean? What does this line mean?
Reversal of impairment loss.
Reversal of impairment loss. It talks about when the fair value less cost to sell, when the fair value less cost to sell will increase, then you have to take the increase only to the extent of previously accumulated impairment losses, right? A gain or loss not previously recognized by the date of the sale of the non-current asset or disposal group is recognized at the date of derecognition. Sir, we have stated the non-current asset held for sale at the lower of carrying value and fair value less cost to sell, right? But actually, आप जब इसको क्लासिफाई करते हैं तो क्या एसेट बिक चुकी होती है क्या? When you classify an asset as a non-current asset held for sale or disposal group, whether the asset is actually sold out? No. तभी तो वो सारी condition है ना? That management is committed, you have started searching buyer, you have quoted a reasonable price, you are expecting that the sale will complete within 1 year, it is unlikely that the plan will change. So you have considered a rate of, let's say, 100 rupees, but the asset is actually sold out at 90 rupees. This 10 rupee will be recognized as a loss on the date of sale. Or the asset is actually sold out at 105 rupees. This 5 rupee has to be recognized as profit on the date of sale. Non-current asset classified as held for sale and the asset of a disposal group classified as held for sale are presented separately from other assets in the balance sheet. मैंने आपको दिखाया, have I shown you that presentation of asset or disposal group in the balance sheet? Yes, as a separate item. Okay. So what is your comfort level after looking at this balance sheet of a large listed company? What's your comfort level, guys? Sanya, Sumit, Vignesh, Ginny, Nisha, Niranjan, Mamta, Tushar, Anila, Abrikesh, Rahul,
Very much comfortable, sir.
Adhika. So do you think that instead of only learning theory, you should learn your practical aspects also? Yeah.
Yes, it really helps. Yes, sir.
Okay. So these concepts will not restricted to your question paper. These concepts will come into the interview also. Why? Because if you went to Hindalco Industries Limited for a financial reporting interview, why not that guy who is doing this day in, day out in a practical life? Why he will not ask the question from Ind AS 105? Tell me. Okay. Right, friends? Okay, perfect. So Pooja is saying, sir, same case study में investment property होती तो impairment loss allocate नहीं करते, ये वाला भी cover कीजिए. Okay. So Pooja is saying, sir, please also cover the impairment loss on investment property. For example, if this cash generating unit, this disposal group will have a investment property also. Shall I cover that? Okay. So let me cover that part also. Further extending this example by replacing financial assets, by replacing financial asset with investment property, which is building. investment property building. Investment property building. Okay. So I'm again replacing this example. So instead of financial asset, I have written investment property building, right? And this Ind AS 36 is subject to Ind AS, it applies to Ind AS 16, Ind AS 38, Ind AS 40. Okay. So this is very much clear. My disposal group held for sale is 43, impairment loss 20, and assets and liabilities 63. What is my impairment loss? My impairment loss will be 20. Why? Because my revised carrying value, revised value of disposal group is 43, right? Lower of step 1 and step 2. How do I allocate this impairment loss of 20? Minus 16 is straightforward. What about the remaining 4? What about the remaining 4? What is the calculation of remaining 4? How to allocate the balance 4? Impairment loss. How to allocate the balance 4 impairment loss?
In the ratio.
Sorry?
Ratio of fair carrying value, revised carrying value.
In the ratio of revised carrying value. Okay. In the ratio of revised carrying value. Revised carrying value of what? PP, intangible, investment property and liability. All.
PP and
not liability.
Pooja is saying only between PP and intangible. Pooja, why you are saying only between PP and intangible? Why not investment property?
Sir, fair value का है ना investment.
Fair value is a different aspect. Impairment is a different aspect. You remember I have told you that in investment property, there are only single model, cost model. And what is the formula of cost model? What is the formula of carrying value in the cost model? In investment property, the cost model formula is same, which is there for PP. So what is the formula of computing a carrying value in case of investment property? Cost minus
Accumulated depreciation.
minus.
Accumulated loss.
I don't know why you guys are getting confused between impairment, fair value. Please remember the basic fundamental of the assets in the balance sheet is your carrying value of assets should not exceed the recoverable value. And if you read the carrying value in investment property, it is cost minus accumulated depreciation minus accumulated impairment losses. The carrying value formula is same, which is of Ind AS 16 property, plant and equipment. It is inherited from property, plant and equipment. So if there is an impairment, it has to be taken, right? But if there is an increase in the fair value, right? If there is an increase beyond cost, it will not to be taken, right? You remember reversal of impairment loss, I have told you in Ind AS 36. So how to reverse the impairment loss? So if you have booked an impairment loss can be reversed. But what is the value up to which this impairment loss can be reversed? You need to compute the carrying value had the asset never been impaired. So whatever is the closing carrying value, your impairment loss can be reversed to that extent. You can listen again the video of impairment of assets. Pooja, is that clear? Investment properties are also subject to impairment.
Yes, sir.
Okay. Because when you read the formula of carrying value of investment property, it is cost minus accumulated depreciation minus accumulated impairment losses. Okay. So the only thing is in investment property, it cannot go beyond cost. It cannot go beyond carrying value. आप fair value अगर ज़्यादा है तो वो नहीं ले सकते. Because fair value model is not allowed. But impairment तो cost model में भी होता है ना? Yes. Impairment is there in the cost model also, correct? So this minus 4 multiply by 26 divided by sum of this plus this plus this. Okay. So what is the sum of these all three numbers? 61. So -4 multiplied by this divide by, can I write 61? -4 multiplied by 17 divided by 61, 0. Now what is my revised value? Okay. I hope it is clear now. Okay. So after Hindalco and discussing the disposal group, let's move to the next part. Changes to a plan of sale. Sir, when we discussed the sale is highly probable, do you remember we discussed 5 conditions? When we discussed sale is highly probable, we discussed 5 conditions. What are those 5 conditions? What were those 5 conditions which we discussed in the last class? कौन सी थी वो 5 condition?
Management must be.
Management is committed to the plan of sale. There is an active action taken by the management to locate the buyer. There is an active market that is available for the sale. And the share should be expected to qualify for recognition. And then action required to complete the sale is taken.
Okay. Just remember the simple layman language. Management must be committed. Means it has to be approved in the board meeting. Number 2, management has started searching the buyer. Buyer को ढूंढना शुरू कर दिया. Management is committed. They have just remember like a story. Management is committed to sell that asset. They have started searching buyer. They have quoted a reasonable price and they are expecting that the sale will be completed within 1 year and it is unlikely that the plan will change. Will you be able to remember these 5 conditions? Right? Management is committed. They are searching buyer. They have quoted a reasonable price and they are expecting that the sale will be materialized within 1 year and it is unlikely that the plan will change in future. It is unlikely. It is not written. It is not written that it is impossible. It is not possible that the plan will change in future. It is written that it is unlikely that the plan will change in future. Unlikely. मतलब chances कम है. हो तो सकता ही है ना. Chances कम. What happen if there is a change in plan of sale? The company has decided not to sell the asset. After 7 months, after 9 months, the company has decided not to sell the asset. Then what will happen? I will tell you a real life story. Prior to COVID, there was a company in Uttar Pradesh, UP. There was a company in UP. Okay. Are you guys able to hear me? Because one of the student is getting some disturbance in video. Are you able to hear me properly? It's a properly audible?
Yes, sir. Go ahead.
Okay. So there was a company in UP and I'm talking about this COVID came in the month of March. It started in December 2019 in China. So in September 2019, there was a company in UP which is into the business of manufacturing sanitizer, right? So they have 2 plants. They have decided to sell 1 plant of sanitizer because the demand was not that great, right? And whatever was the demand, they are able to cater the demand in the 1 plant itself. So they decided to sell another factory. So they have an intent and ability. So that factory was available for immediate sale in present condition. The sale was highly probable. And hence they have classified this factory as a disposal group held for sale. Now what happened? In December 90, when COVID started in China, and in February 20, when the COVID hit India also, right? And you guys have witnessed the impact of that COVID, right? The demand of sanitizers has grown like anything. Even if today, if you will see in all the corporates, companies, public departments, right? Banks, everywhere there is a machine of sanitizer, right? There is a machine. where sanitizer is there. Everyone started keeping sanitizer on their workstation, desk, car, rooms, everywhere. Am I right? So that was the kind of an impact of that COVID. So when COVID came in February 2020 and everyone started manufacturing sanitizer, the demand has grown like anything. And I have seen in every fourth or fifth houses in the street, people are manufacturing the homemade sanitizer. Okay. So this company, instead of selling that factory, which was in the business of manufacturing sanitizer, they have decided to buy one more plant. Even though they have entered into a binding agreement, they have decided to bear the penalty and they have decided not to sell that factory, which is in the manufacturing of sanitizer. So friends, the plan has changed. So when the company has decided to sell this asset, I mean to say, when held for sale criteria has met, this factory has moved from Ind AS 16 PPE to Ind AS 105, correct? Correct? But when the plan has changed, now this property, this factory is no longer available for sale. What to do now? क्या करेंगे? अब ये available for sale नहीं है. क्या करेंगे?
वापस PPE में ट्रांसफर दिखाएंगे.
We have to transfer it back to PPE. Okay. When we have moved it from PPE to 105, what was the criteria? IS, PC and HP, that criteria was met and you have transferred to 105. At what value you have measured? At what value you have measured the asset?
Or fair value, whichever is less.
Carrying value and fair value on the date of fair value less cost to sell on the date of classification, whichever is lower. Right? But now it is again moving back to the PPE. So standard says when the HFS criteria is no longer met, the asset has to be removed from HFS category and it has to move to the normal category. Normal category means Ind AS 16, Ind AS 38, Ind AS 40. Okay. Normal category. Ind AS 30, 16, 38, 40. Okay. And on the date of reclassification from HFS to PP, again you have to recognize that lower of carrying amount had the asset never been impaired. Carrying amount had the asset never been impaired. Matlab?
You would have
What?
stopped calculating depreciation. We will do that.
Yes. If this carrying amount had the asset never been classified as held for sale. अगर ये asset held for sale कभी classify नहीं होता तो क्या करते? It was normal PP. हम हर reporting date पर we had to calculate the depreciation and impairment if any. So normal PP accounting will go, right? So we have to compute what is the carrying value had this asset never been classified as held for sale. And recoverable amount on the date of change of plan. And recoverable amount on the date of change of plan. And the recoverable amount. What is the formula of recoverable amount? Ind AS 36, remember?
Fair value or value in use, whichever is higher. Fair value less cost to sell or
Yes.
value in use, whichever is higher.
Higher of fair value less cost to sell and value in use. Okay. So friends, again, I'm taking you back to the Excel and let me explain you the concept of this change in plan. Okay. Then we will solve one or two questions from ICAI study material as well. Yes. Change in plan of sale. In case of change in plan of sale, the asset is going to be reclassified in normal non-current asset category again. Means Ind AS 16, Ind AS 38, Ind AS 40. Right? Okay. Change in plan of sale. In case of change in plan of sale, the asset is going to be classified in the normal NCA category. So there was a machinery. What was the accounting standard applicable to machinery? Ind AS 16. When this machinery met the criteria of HFS, it become NCHFS, Ind AS 105. When it ceases to HFS criteria, there is a change in plan of sale of asset. It will again become machinery under Ind AS 16, right? When it was machinery, which standard was applicable? Ind AS 16? Cost model, revaluation model. If cost model is opted, then you need to compute carrying value every reporting date, cost minus accumulated depreciation minus accumulated impairment losses. For example, this machine was purchased on 1st April 2019 for 5 lakh rupees and the life was 10 years. Okay. So friends, this Ind AS 16, we know when it become NCHFS, what was the criteria when it become NCHFS? Lower of step 1 and step 2, lower of the following, lower of what? When
Carrying
it become
value or
NCHFS, then
carrying value
lower
or
of
fair
step
value
1.
less cost to sell.
Yes. Lower of step 1, carrying value. Step 2, FV less CTS, fair value less cost to sell. When it become again PP, then तो क्या करेंगे जब ये PP बन गया फिर से? Then again you have to measure lower of what? Step 1 and step 2. What is step 1? Carrying value had the asset never been classified as HFS. अगर ये HFS कभी क्लासिफाई नहीं हुआ होता तो आज क्या कैरिंग वैल्यू होती? एंड रिकवरेबल वैल्यू. Correct. For example, the machinery was purchased on 1st April 2019 for rupees 5 lakh. Cost is 5 lakh. I hope my Excel is visible to all of you, right? Life is 10 years. Life is 10 years. Okay. Now this machinery becomes NCHFS. This machinery becomes NCHFS on, let's say, 31st March 2020. This machine become NCHFS on 31st March 20. On 31st March 20. Then what will happen? क्या करेंगे? सबसे पहले तो carrying value निकालेंगे. So this is 1st April 19. Then coming to 31st March 20. 31st March 20. I need to compute the carrying value. Okay. So how to compute the carrying value? First of all, I need to compute the step 1 carrying value. Cost. What is the cost?
5 lakh.
What is the depreciation?
50,000.
Less depreciation. 50,000. This divided by 10. What is my carrying? What is my step number 1? What is my step 1? Step 1 carrying value. Step 2 assuming fair value less CTS is 4 lakh. Fair value CTS is 4 lakh. So what is the value of NCHFS? What is the value of
4 lakh.
NCHFS? NCHFS value is 4 lakh. Yes. Okay. Lower of step 1 and step 2. Lower of step 1 and 2. Okay. What is the accounting entry? Accounting entry at the time of classification as HFS. What is the accounting entry?
NCHFS account debit to
Machine
PP or asset account.
NCHFS account debit.
Impairment loss or decline.
To machine PP account credit. To machine PP credit. What is the debit value? 4 lakh. What is the credit value? 4 lakh 50,000. So depreciation entry will also be there. Purchase entry will also be there. I'm not passing the depreciation in purchase entry. I am passing the accounting entry only at the time of classification at HFS. Impairment loss on classification. Okay. Classification, debit. What is impairment loss? 450 minus
50,000.
4 lakh. Okay, 50,000. Now on 31st March 21, this asset again becomes PP. Why? Because it is no longer meeting the HFS criteria. It is not available for sale now. The company has withdrawn the plan of sale. Okay. So what to do again? What to do? You have to compute step number 1. What is my step number 1? What is my step number 1? Compute carrying value had the asset never been classified as HFS. अगर ये एसेट कभी भी HFS क्लासिफाई नहीं होता तो निकालो कैरिंग वैल्यू. So what was my cost? What was my depreciation? क्या होता अगर ये कभी भी क्लासिफाई नहीं होता तो?
1 lakh.
2 years depreciation, sir.
Cost was 5 lakh. Okay, less depreciation for which year? 1920. ये तो सर ये तो पिछले साल लगा दिया था हमने 50,000. ओके ठीक है, लगा दिया था तो कोई बात नहीं. सर 1 साल का और डेप्रीसिएशन लगाएंगे. डेप्रीसिएशन अगर ये हेल्ड फॉर सेल नहीं होता तो भी तो मैं डेप्रीसिएशन लगा रहा होता एज पर पीपी स्टैंडर्ड. यस, minus 50,000. I hope you guys are able to understand this, what I'm doing, right? This is carrying value. This is carrying value as per PP. Had this asset never been impaired, this is carrying value as per PP. Assuming there was, so here I'm assuming there was no impairment when it was PP, right? As per the numbers. Step number 2. What is my step number 2?
Recoverable value.
Recoverable value. Step number 2 is assuming recoverable value is 3,80,000. I just assume recoverable value is 380. So what is the value at which this PP is again required to be reinstated? What is the value at which PP is required to be reinstated?
3,80,000. Lower of CV.
Lower of step 1 and step 2. Accounting entry. Now accounting entry at the time of change of plan. What accounting entry I'll pass? Machine PP account debit. Machine PP account debit. Machine PP account debit. To what? Machine. किसको क्रेडिट करेंगे? NCHFS को क्रेडिट करेंगे. Correct? What is the value at which machine will be debited in the PP 380? Right? Lower. At what value machine NCHFS will be credited?
4 lakh.
4 lakh. Because this machine was recognized at 4 lakh NCHFS. And after that, no depreciation was there. Because once the asset will become NCHFS, no depreciation. Right? 4 lakh. Again, this debit is lower than the credit. Impairment loss on reclassification. I hope you have understood this. You have understood this question. You have understood this concept. I hope you guys have understood this concept, friends. Yes or no? Yes.
Yes, sir.
Now let's solve the question from ICAI study material. And please confirm once this material is visible to you guys. Oh, just allow me a minute. Okay, I think Hindalco balance sheet is visible now, right? So let me open the ICAI study material. Just a minute, I'm opening that material. Yes, I'm sharing the screen. Yes, Abrakesh, please ask the question.
Sir, in the same example, instead of a date of reversal of the decision from HFS, for HFS back to PPE, date is 30th June, for example. So should we calculate carrying value as of 30th June?
Of course,
Or-
yes.
Okay.
Of course, yes.
Okay.
If it is 15th August, you need to compute till 15th of August. Right? Okay.
Yes, sir.
Illustration 2. Illustration number 2. Are you able to see this illustration number 2?
Yes, sir. Yes, sir.
Okay. And I want you guys to solve with me, right? And just listen that how I'm reading this question and how I'm answering this question. S Limited purchased a property for rupees 6 lakh on 1st April 2001. Okay. Property account debit to bank account 6 lakh rupees. 1st April 2001. The useful life of the property is 15 years. Okay. So 6 lakh divided by 15. The depreciation is 40,000. So I'm just answering the solution. The moment I am passing these lines, I'm just answering it. So if the information will be updated, I will update my solution also. On 31st March 2003, S Limited classified this property as a held for sale. Okay, it means after 2 years. 31st March 2002, 31st March 2003. It means 2 years it was a PPE and now it becomes 105 NCHFS. The impairment testing provides the estimated recoverable amount. Okay. It means it is talking about impairment when it is PPE. Okay. 4,70,000. So if this property was purchased on 6 lakh, what is the accumulated depreciation for 2 years?
80,000.
80,000.
80,000.
6 lakh minus 80,000. What is the value? 5,20,000.
5,20,000.
So cost minus accumulated depreciation is 520, but the recoverable value is 470. So what is the impairment?
50,000.
50,000. What is the carrying value as per Ind AS 16? 470.
4,70,000.
470. Recoverable value ही carrying value बन जाएगी ना 470. Okay, understood. So now step 1 is clear. Step 2 is fair value less cost to sell. How to compute? Okay, it is given in the question. The fair value less cost to sell was rupees 4,60,000. Okay, whatever is lower, 470, 460. What is lower?
460.
460.
What is the accounting entry?
Property NCA HFS account debit 4,60,000. To impairment loss 10,000. To property account, credit property account 4,07,000. Debit
Yes.
the loss and NCA.
So property NCHFS account debit 4,60,000. Property PP credit 4,70,000. 10,000 will be debited as an impairment loss. Correct? So there are two impairment loss. कौन सा था एक? 50,000 when it was PP, 10,000 when it is NCHFS. After 1 year, on 31st March 2004, after 1 year, okay, management changed the plan. As property no longer met the criteria of held for sale, the recoverable amount as at 31st March 2004 is 5 lakh. Recoverable amount is given after 1 year. What we need to compute? We need to compute the carrying value. Carrying value, which carrying value? Had this asset never been classified as held for sale, अगर ये asset कभी held for sale नहीं होता, हमेशा PP ही होता, then what is the carrying value? So how to compute carrying value? I need to charge depreciation for 1 year also, right? On 31st March 2003, I have already computed the carrying value. So now I need to compute the carrying value as on 31st March 2004. What is the carrying value? Tell me.
4,80,000.
Sorry, 4 lakh?
80,000.
So 4,70,000.
Okay.
4,70,000 minus 4,70,000 divided by remaining life.
Very good.
Yes.
Great. Friends, what is the formula for computing depreciation? Opening carrying value divide by remaining life. Divide by remaining life. You remember this pose? Divide by remaining life. So nowadays the song is very popular from Stree 2. Right? So you remember that. Okay. So what is my carrying value when it was PP? What is my carrying value? Again, carrying value का मतलब होता है cost minus accumulated depreciation minus accumulated impairment losses. What is my carrying value when it was PP? It is 470. So I need to compute depreciation on 470 for the next year. So 2004 में depreciation क्या होगा? 470 divide by what is the remaining life?
13.
The life was
13 years.
15 years, 2 years has been passed. The remaining life is 13 years. So 470 divided by 13, what is the number? What is the number? 470 divided by 13?
36,154.
36,150.
Depreciation
36,000.
amount.
36,000 approximate. So 470 minus 36,000, what is the carrying value? 36,154. You can see carrying amount immediately before reclassification as held for sale. It is 4,70,000. Then fair value less cost to sell. It is 4,60,000. When it is fair value less cost to sell, right? And so basically it is 470. 36,154 is the depreciation. 433,846 is the carrying amount had the asset never been classified as held for sale. What is the recoverable amount? 5 lakh. What is lower? 433 is lower. What is the accounting entry? This property PP account debit 433,846 to NCHFS. What is the credit of NCHFS?
$460.
460. Credit 460. Where the difference 26,154 will go?
P&L impairment.
P&L impairment loss on reclassification. P&L. Any doubt on this question? Any doubt? Any question? Any query? Abarkesh, Sumit, Vignesh, Anila, Ginny, any question?
No, sir.
No any question? Okay, very good. Friends, it's 8:23 now. So let's have a 10 minutes break and we will start at 8:33, right? We will start with discontinued operations. Right? I hope you guys have been able to understand when the asset is moving from PP to NCHFS, how to measure, and from NCHFS to PP, how it is going to be measured. Okay, to PP, to investment property, to intangible asset, one and the same treatment. So let's meet at 8:34. Okay, break start, Ashok ji. Friends, now we reach to the last part of this Ind AS 105, which is discontinued operations. What is meant by discontinued operations, right? So discontinued operations is like a component of an entity, right, which comprises operations and cash flows that can be clearly distinguished operationally and for financial reporting purpose from the rest of the entity. For example, Tata Motors. Tata Motors Limited is into passenger vehicle business and the commercial vehicle business, right? Private vehicle and commercial vehicle, like Tata Nexon, and probably they are also into the manufacturing of commercial vehicles as well, right? So what happens? This Tata Motors management wants to see what is my operational performance in terms of, passenger vehicle and my commercial vehicle, and what is my cash flows. I'm just taking an example, Sumit. And what is the cash flows which are arising from these two separate segments, right? So this operations is this component. This component is just like a segments, operating segments. These components are like an operating segments, okay? So these components are those kind of segments where the operational performance and the cash flow performance can be identified, can be distinguished, can be identified from the operational and the financial reporting purposes. Okay. So what is meant by discontinued operations? Discontinued operation is like a geographical area of operation. It is like a separate major line of business, major line of segment. Let's say I am operating my coaching center in India, in Dubai, and in Nepal, for example, right? So I decided to discontinue my coaching center in Dubai and Nepal, but I will continue in India. So what does it mean? First of all, these three locations, Nepal, Dubai, and India, these three are the geographical location. I am also analyzing my operational and cash flow performance from these three countries' operations, right? I have decided to discontinue from Dubai and Nepal. So it means when I decided to discontinue, it means I am discontinuing my operation from a geographical location. So this is a discontinuation of geographical area of operations. This is a discontinuation of geographical area of operations, correct? Is that right? Is that right? This is a discontinuation of geographical area of operations. Okay, friends?
Yes.
Yeah. Geographical area of operations. Second example. I am teaching in India. I have a coaching center in Gurgaon. I have a coaching center in Delhi. In Gurgaon coaching center, I am teaching FR. In Delhi coaching center, I am teaching auditing, right? I have a separate setup. I have a separate building. I am paying rental. I have separate assets, right? So this Delhi business and Gurgaon business is totally separate. My students are separate. My customers are separate. I am getting a separate revenue. I'm incurring a separate cost. I'm teaching a separate subject, right? So I have two products. In my business, I have two products. One is financial reporting, another one is auditing. So one fine day, I decided to discontinue my business in Delhi. I decided to discontinue my auditing paper. Okay, friends, whether this auditing paper is giving me separate cash flows, whether I have a separate cost, answer is yes. Whether I can determine the separate operational performance, answer is yes. So friends, what happened in this case? If I decided to discontinue my auditing business from Delhi, whether it will be construed as a discontinued operations or not? Yes, because I am discontinue one major line of business. I am discontinue geographical operation, right? So what is a discontinued operation? Discontinued operation is a component of an entity. It's like an operating segment. It's like a business segment that has been disposed of or is classified as held for sale, and it represents a separate major line of business or geographical area of operations. or it is part of a single coordinated plan to dispose of a separate major line of business or geographical area of operation. For example, let's say Tata Motors decided to discontinue all its plant in China, and it is part of a single coordinated plan. So they have 3 plants in China, let's say in Shanghai, in Jinping, and in Macau, for example. So they told that first we will discontinue Macau, then Jinping, then Shanghai. Okay. So it is a part of a single coordinated plan to discontinue the geographical area of operations, Okay. Or in China, they have decided to discontinue the commercial vehicle manufacturing, commercial vehicle business. So what they have done? So basically, it is at a part of single coordinated plan. They have decided that first we will discontinue the commercial vehicle manufacturing in Shanghai, then in Jinping, then in the Macau. So it is a part of single coordinated plan to discontinue the major product line, one of the business product. Okay. Or if a company has acquired subsidiary exclusively with a purpose of resale, it is also considered as a discontinued operation. When the company will consolidate, the company will show the revenue, cost, profit, the results of the subsidiary as a discontinued operations. Okay. Is that clear? So discontinued operations is a separate, it's a major geographical area of operation or a major line of product which the company is discontinuing. Friends, you remember when I started this lecture, I told you that this standard talks about accounting for asset held for sale and presentation and disclosure requirement of discontinued operations, right? Whether every discontinued operation is a disposal group or not. क्या हर एक डिस्कॉन्टिन्यूड ऑपरेशन में डिस्पोजल ग्रुप होगा? जब भी मैं ऑपरेशन डिस्कॉन्टिन्यू करूंगा, will I dispose of the assets and liabilities also?
Yes, sir.
Okay. What about others?
Mostly yes only, sir.
Mostly yes. Okay. Pooja, Abrikesh, Ginny.
Yes, sir.
Okay. In every discontinued operations, whether disposal group will be there, disposal group held for sale will be there.
Yes,
Now
sir.
let me give you an example and then you will answer. I have a coaching center in Gurgaon and coaching center in Delhi. There is a separate building in Delhi, okay, in which I am teaching. I have a separate setup of classroom where the projectors are there, the computer laptops are there. Projectors are there, computer laptops are there. Air conditions are there, right? Whiteboard is there, furniture fixture is there. Office equipment, water purifier, air condition, lot of assets are there in that Delhi coaching center. I have decided to discontinue my auditing paper, or I have decided to discontinue that I will not teach CA Inter. Discontinue. Is it a discontinued operation? Answer is yes, because I am discontinuing my one of the major line of product. And I'm also discontinuing my operation from Delhi. It is a discontinued operation. But when I'm discontinuing, I have a large chunk of disposal group. I have large chunk of group of assets. Furniture fixtures, projector, computer, laptop, water purifier, air condition, whiteboard, lot of assets and lot of assets I have. Is it necessary that I will discontinue, I will dispose of those assets? I can use those assets in my Gurgaon business. I want to expand my Gurgaon business and I can use those assets in my existing business. If Tata has decided to discontinue commercial vehicle, Tata may use those assets in their existing business, right? So I have decided not to dispose of the asset. I have decided to use the asset. But even though if I'm using the asset, tell me, my major product line has been discontinued or not? My major line of business, one of the major product has been discontinued or not? Earlier, I was teaching CA Inter and CA Final. Now I will only teaching CA Final. Earlier, I was teaching FR and audit. Now I will only teach FR. I will not have revenue from CA Inter or from auditing. So friends, every discontinued operations may not necessarily be a disposal group held for sale also, right? So discontinued operation may have a disposal group held for sale, may not have a disposal group held for sale. Have you guys understood? Will your answer changed or not?
Yes,
Have your
sir.
answer changed or not?
Yes.
Yes. So discontinued operation तो हो गया ना, but जरूरी नहीं कि disposal group held for sale भी हो. Correct? Correct? Right? Sun Limited is a retailer of takeaway food like burger and pizzas. It decides to sell one of its outlet located in Chandni Chowk in New Delhi. The company will continue to run 200 other outlets in New Delhi. Okay. So they have 200 outlets in New Delhi and they have decided to sell one outlet in Chandni Chowk in New Delhi. All Ind AS 105 criteria for held for sale classification were met on 1st October. The outlet will be sold in June. Okay. Management believes that outlet is a discontinued operation and wants to present the result of outlet as a discontinued operations. Tell me whether this outlet, single outlet, is a NCHFS or it is a disposal group held for sale or it is a discontinued operations.
Disposal group of asset held for sale.
It is not a discontinued operations.
No, because there are 199 outlets are already there.
Very good. Very good, Abdul. Yes, it is not a discontinuation of geographical area of operation. Might be the outlet was discontinued in Chandni Chowk, but probably the other outlet will be there just 1 or 2 kilometers away from Chandni Chowk or even within Chandni Chowk. So the Chandni Chowk outlet is a disposal group. It is not a discontinued operation. It is only one outlet. It is not a major line of business or geographical area, nor a subsidiary acquired with a view to resale. Friends, let's go to illustration number 3. So let me take you to the ICAI study material and discuss one illustration from ICAI study material. Please confirm once this ICAI study material will be visible. Just a minute. Yes. Is it visible now? ICAI study material?
Yes, sir.
Let's discuss illustration number 3. Identify whether each of the following scenarios give rise to a discontinued operations and or classification of asset as held for sale. MNO, this is a company, disposes of a component of the entity by selling the underlying asset. Disposes of a component of the entity. The sale transaction is incomplete at the reporting date. Tell me, it is a discontinued operations and a disposal group held for sale, or it is a discontinued operations, or it is only a disposal group held for sale. Just think about. Is it a discontinued operations?
Yes.
Is it a disposal group held for sale?
Yes.
Yes, both are yes. So accounting will follow as per disposal group held for sale, and for discontinued operation, additional disclosures are required. I will tell you that. PQR Limited has ceased activity that meet the definition of discontinued operations, right? So PQR Limited has stopped the business which meet the definition of a discontinued operations without selling any assets. It seems like my auditing business example. It seems like my daily coaching center, right? So whether in point number 2, is it a disposal group held for sale or is it a discontinued operation or both?
Discontinued
Discontinued
operation,
operation.
but not held for sale.
Of course, yes, not held for sale. Because the question says that it is not selling any asset. It is using the asset in the existing business. Question number 3. STU ceases activities. STU ceases activities and has already completed the sale of the underlying assets at the reporting date. STU ceases activities and has already completed the sale of underlying asset at the reporting date.
Discontinued operation only.
Discontinued operation, sir.
But whether it is asset held for sale,
It's already sold.
it's
Sold.
already sold. So nothing will come in the balance sheet as a disposal group held for sale, right? So it's already sold. Very good. And has completed. Completed means the reporting date पे कुछ नहीं आएगा. So if this kind of question will come into the exam, you can say that it is a discontinued operation as well as it was a disposal group held for sale. But since the asset has already been sold out, so nothing will come into the balance sheet. जब asset बिक चुके तो balance sheet में क्या आएगा? नहीं आएगा ना? Right? So you can just write an elaborative answer. Okay? Understood? Understood, friends?
Yes, sir.
Yes, sir.
VWX will sell or has sold assets that are within the scope of Ind AS 105 but does not discontinue any of its operations.
Only asset
Classification
held
of
for sale.
asset held for sale.
Not a discontinued operation. Question ने खुद ही बोल दिया है. So not a discontinued operation. So you guys have given the right answer. You can see on the screen, you have given the right answer. Okay. Illustration number 4. Sun Limited is a retailer of takeaway food like burger and pizza. I have already covered this illustration. Yes or no?
Yes, sir.
Yes,
Yes, sir.
I have already
Yes, sir.
covered this illustration. Yes. You have a question, Sumit?
No, sir.
Okay. So illustration number 3, illustration number 4, I have already covered. Illustration number, let's go to illustration number 5. There is no illustration number 5. Let's talk about this question number 1. Please read this question and tell me the answer also. I need the answer from at least 4 students. I need the answer from 4 students. What is the answer? On 28th February 2001, entity X become committed to a plan to sell a property. However, it plans certain renovations to increase its value prior to selling it. The
Not
renovations
meeting the criteria.
The renovations are expected to be completed within a short span of time, that is 2 months. Comment whether the property can be classified as held for sale at the reporting date, that is 31st March 2001.
No.
No, sir.
Why?
Because if it is a condition by the buyer, then it can be classified. Before that, for the increase of value, the seller itself is doing the renovation.
Okay. So let's
It is
see.
not available for sale in immediate condition.
Yes, it is not available for immediate sale in present condition. So what is written in the answer? The property cannot be classified as held for sale at the balance sheet date as it is not available for immediate sale in present condition. Although the renovations are expected to be completed within short span of time, this fact is not relevant for classification. The delay in timing of the transfer of property imposed by entity X demonstrate that the property is not available for immediate sale. However, if the PP meets the criteria for held for sale by 30th of April after 2 months, okay, and the accounts are not authorized by that date, then necessary disclosure need to be given in the financial statement, right? So it says that what happened? So this property was not held for sale on 31st March, but before approval of the financial statement, this property becomes held for sale. So standard says that it is a non-adjusting event and you need to disclose this fact in the notes to accounts, right? Disclosure
Sir,
तो
ये
करना
highly
पड़ेगा ना?
probable तो है ना? Sir, ये highly probable तो है ना?
30th अप्रैल को तो highly probable हो गया ना 30th अप्रैल को.
Yes.
So you need to see highly probable only when the ISPC condition will met.
Okay.
ISPC talks about intent and ability. Highly probable talks about execution. Correct?
Yes,
तो ये
got it.
31 मार्च को तो है ही नहीं ना, ISPC नहीं है 31 मार्च को, है क्या ISPC?
नहीं sir.
नहीं है ना? Okay, very good. Friends, let me talk about the additional disclosures, presentation and disclosure of discontinued operations now. Okay, so now we are talking about discontinued operations. Discontinued operations. And now we have understood these facts. समझ आ रहा है ना सबको या नहीं समझ में आ रहा है? Discontinued operations. Okay. If discontinued operation include disposal group held for sale, measurement requirement is for disposal group, presentation and disclosure for discontinued operations. If discontinued operation does not include disposal group held for sale, then only, then no measurement. जब बेच ही नहीं रहे तो measurement क्या करोगे? But only presentation and disclosure for discontinued operations, right? Now let me discuss that why it is important to present and disclose the discontinued operation. Why it is important to disclose the result of discontinued operation separately. Okay. Friends, let me explain you with the help of an example. Let's say the company has 3 operations A, B, and C. A and B was for the full year, and the company has earned a revenue of 1500 crores from selling the product A and B. The company has discontinued product C on 31st December during the year. On 31st December during the year. Okay. This product C was discontinued in 9 months. The revenue was 500 crores. And I am talking about, let's say, financial year 23-24. Okay. Financial year 2023-24. Disclosure in case of presentation, revenue from operations. Revenue from operations. How much is the total revenue? The total revenue is 2000 crores. The total revenue is 2000 crores. This is option 1. This disclosure is option 1. Okay. Option 2. Revenue from operations. Revenue from operations. Continuing operations. Continuing operations. Discontinuing operation. Discontinuing operations. 1500, 500, and the total is 2000. Tell me which option is better. Tell me which option is appropriate to present.
Second option. Option 2.
Why? Why?
It disclose more properly that which field of the operations are going to continue in future, which will generate future cash flows also.
Absolutely fine, Pooja. So friends, for the user of the financial statement, if option A would have been used, I will not be able to know that one of the major product has discontinued, which was contributing a revenue of 500 crores in the 9 months. Right? So I would not be able to know that what has been discontinued. But when I look at the option number 2, I would be able to know that, okay, in this year, out of this 2000 crore, 500 crore is contributed by a product which has already been discontinued. It means in future, I will not be able to have the revenue from this product number C. I will not have revenue from product C. Okay. I will not have revenue from product C. So option A is misleading. Option B, option 2 is provide a correct picture, true picture, and proper picture to the user of the financial statement, right? And hence, doesn't matter whether the discontinued operation is a disposal group or not, but there are additional disclosure requirement additional presentation requirement is there for the discontinued operations, right? So this is, I just have spoke about one item. Let's talk about the entire P&L. When you discontinue your one of the segment, one of the product, one of the geographical area, you will discontinue, you will forego your revenue, but you will also save some cost as well, right? So friends, again, you need to tell me for the P&L, which option is much better for P&L? P&L. Let's say option number 1. Now we understood that this option is better. This option should be used. Okay. This option provides a fair picture to the users of the financial statements. Okay. Now for the P&L, one option is what I'll do, revenue from continuing operation, from discontinuing operation, then expenses, all the expenses, right? From continuing operation, discontinuing operation, PBT, from continuing operation, discontinuing operation, then your tax, from continuing operation, discontinuing operation, PAT, from continuing operation, discontinuing operation. So this is one option. Option number 2. Option 2. I will give the P&L, okay, for continuing operations. Revenue, expenses, PBT, tax, and PAT. And then I will make a section of discontinued operations, PBT, tax, and PAT. Okay. And the entire P&L will give in notes to accounts. Total PAT. Which one is better option? Which one is more clean option? The entire discontinued operation P&L, I'll give it to into the notes to accounts, refer that, and I will only pick profit or tax or directly PAT, and I will club that PAT with the continuing operation PAT, and I will show the total PAT. Which option is much better?
Second.
The second option is more cleaner option. The second option is more cleaner option, right? So friends, let me again show you the Hindalco Industries balance sheet. And there I will show you the disclosure of discontinued operations. Are you able to see this Hindalco Industries balance sheet?
Yes, sir.
So statement of P&L. In balance sheet, it will come like a disposal group held for sale, right? The impact will be on the performance of any discontinued operations. Can you see this consolidated P&L? Can you see this first line item continuing operation?
Yes, sir.
So they have given the normal P&L for the continuing operation, business as usual. Then there is a profit or loss for the year from the continuing operation. Then they have given the discontinued operation as a separate section. Your PBT from discontinued operations, your tax from the discontinued operations, and your PAT from the discontinued operation. 1699 crore. The total profit is 3483 crores. Right? What is the total profit from discontinued operation? It is a loss. 1699 crore. 1699 crore. 1699 crore. Okay. 1699 crore. So let me take you to the note number 50. Can we see note number 50? Here they have only given the PBT, tax and PAT for discontinued operation. Can we see note number 50? Let's see note number 50. You remember 1699 crores. The financial performance of the discontinued operation for the year ended is as follows. Total income, total expenses, impairment loss recognized as a result of remeasurement of fair value less cost to sell. ये कौन सा impairment है? Which impairment is this? Which impairment?
Subsequent changes in value, fair value less cost to sell.
Subsequent
remeasurement जब हम करते हैं fair value less cost to sell का.
initial और
हाँ,
subsequent
yes.
दोनों हो सकते हैं, right?
जी.
So initial remeasurement भी करते हैं ना, lower of carrying value and fair value less cost to sell. If fair value less cost to sell is lower, you need to book an impairment, correct? So this is an impairment when you have remeasured it to fair value less cost to sell. Probably the fair value less cost to sell was lower than the carrying value, okay? So this is a loss before income tax. This is a loss before income tax. This is an income tax benefit, okay? 354. This is an income tax benefit. Correct? So this is loss after income tax from discontinued operations. And then there is a gain on sale also. ये कौन सा है? Gain on sale. Actual sale. पहले उसको रीमेजर किया फेयर वैल्यू लेस कॉस्ट टू सेल पे, फिर एक्चुअल में सेल किया तो प्रॉफिट आया 68 करोड़, छोटा सा प्रॉफिट है 68 करोड़ का. So what is my loss from discontinued operations? 1699 crores. That is which is there in the P&L, right? Is that clear or not clear? We have presented the discontinued operations P&L separately in the notes to accounts, and we have just clubbed PBT, tax and PAT in the main P&L. Yes? Any question here? Any question here? Any question here? Friends, any question?
No, sir.
No? Okay.
Sir,
So
when
let me
gain
take
is
you-
there on sale, how come there is a tax savings there, sir?
How can?
When gain is there, they're saying tax saved on that sale.
Income tax benefit on sale of discontinued operations. So basically, you remember? So when you are selling, so this gain is arising. This gain is arising on what? Between the sale value versus the carrying value. Gain तो वही होता है ना, between the sale value versus carrying value.
Yes, sir.
If you are carrying your asset in the balance sheet at 100 rupees, you are selling the asset at 105 rupees. There is a gain of 5 rupees on the actual sale. But you have already recognized an impairment loss. The actual carrying value of the asset was 150 rupees. You have already recognized an impairment loss of 50 rupees. When you are carrying that asset at lower of carrying value and fair value less cost to sell. Income tax does not understand the meaning of impairment loss. Income tax says that I don't know impairment loss. Right. So technically speaking, will you pay any tax on that sale transaction?
No, sir. No, sir.
The cost
Understood.
was 150. The
Yes,
cost
yes.
was 150. It is coming in your books at 100. Why? Because of 105 principle. Income tax does not understand 105. Income tax understand what is your cost price, what is your sale price, put the depreciation as per Income Tax Act, what is the carrying value as per Income Tax Act. After putting depreciation, what is the sale price? Sale price minus cost price is your profit loss. Correct?
Yes, sir. Understood, sir.
Understood? Okay.
Yeah.
Sir, Abrakesh.
Yeah, British.
Sir, in that disclosure part, after the loss from discontinued business, there is a one remeasurement of defined obligation has been mentioned. What is that? Is part of any Ind AS?
Statement of profit and loss has two parts. One is P&L, another one is other comprehensive income. Right?
Yeah.
You guys have read this concept of other comprehensive income in Ind AS 1. The faculty has taught you
Yes.
Ind AS 1. Correct?
Yes.
So this P&L, this discontinued operation has an impact in your P&L as well as OCI. So this is the OCI item. So this defined benefit, remeasurement of defined benefit plan is nothing. It's the actuarial gains and losses on the employee liabilities which are pertaining to this discontinued operations. अगर इस कंपनी ने क्या किया है, डिसकंटिन्यूड ऑपरेशन किया है, तो क्या किया है, इस कंपनी ने अपना एक बिजनेस डिसकंटिन्यू किया है. इसका मतलब एम्प्लॉइज की रिट्रेंचमेंट भी हुई होगी ना, एम्प्लॉय वुड हैव लेफ्ट, राइट? सो that is the actuarial gain and loss impact which is covered under OCI. So आपको तो दोनों करना पड़ेगा ना. If you will see this P&L, so this is the profit level. ये profit level है. Then there is a other comprehensive income also. Right? So you need to take the impact of other comprehensive income of what? Of your discontinued
operation.
You can see they have just merged this remeasurement of defined benefit obligation on the discontinued operations. Okay. Friends, whenever there is a discontinued operation, the standard talks about one more disclosure, one more presentation. What is that disclosure? So earnings per share, you have to disclose the earning per share for continued operations, for discontinued operations, and for both the operations. Continued operations, discontinued operations, and both the operations separately, right? Earning per share from continuing operation, from discontinued operation, and from both the operations separately. Fine? Is that fine? Right? So have you understood the disclosures of discontinued operations? Why disclosure of discontinued operation is important? How this disclosure has to be done? Correct? So standard says that in case of discontinued operations, the earnings per share in the statement of profit and loss will be shown as below. Basic and diluted EPS for continuing operations, discontinued operations, and total operations. Okay, this is the requirement of disclosure, right? So we discussed this part also, my dear friends. We discussed this part also. Okay. So this presentation and disclosure of discontinued operations, this is all we have discussed. Talking about the comparison. So in accounting standard, AS 24 only talks about discontinued operations, but Ind AS talks about non-current asset held for sale as well as discontinued operations, right? So Ind AS 105 is comparatively larger and bigger than accounting standard. So non-current asset held for sale comes under the kitty of accounting standard 10 and accounting standard 26, right? It talks about when the asset is retired from active use, that asset has to be measured at carrying value, net book value, or net realizable value, whichever is lower. But Ind AS 105 provides a detailed guidance on the measurement of non-current asset held for sale. An entity can continue to depreciate an asset. Tell me, is it true or false? An entity can continue to depreciate an asset even if it classifies it as a non-current asset held for sale. As per Ind AS. False. Asset classified as held for sale must be presented under the appropriate asset head with a separate disclosure in the note. True or false? Asset classified as held for sale must be presented under the appropriate asset head with a separate disclosure in the note. For example, PP, there are 5 machineries and there are 2 machinery which is classified as held for sale. Whether these 2 machinery, it has to be shown separately or it has to be shown within PP and a disclosure in the notes to accounts.
Only
Separately.
Separately, sir.
It has to be shown separately. The
So
3
answer would be
machine,
false.
yes, the 3 machine would be shown as a PP non-current asset, and this 2 machine will be shown as a non-current asset or disclosure
NCA
group
held for sale.
held for sale under the current asset. Okay, and the PP has to be measured at cost or revaluation model. but this NCHFS has to be measured at lower of carrying value and fair value less cost to sell at the initial measurement date, and at a fair value less cost to sell on the subsequent measurement date. Under Ind AS 105, an entity is committed to distribute the asset or disposal group to the owners. That is, the asset must be available for immediate distribution in their present condition. The distribution must be highly probable. Available for immediate distribution in the existing condition. Distribution must be virtually certain. Immediate distribution reasonably certain. Immediate distribution virtually certain. Which is the right answer?
Yeah.
Option
A
A,
is
sir.
the right, A is the right answer. How to measure a non-current asset or disposal group that ceases to be classified as held for sale? Means plan has been changed. Lower of carrying amount which would have been had the asset never been classified as held for sale, and recoverable amount. Lower of carrying amount on the date asset ceased to be classified as held for sale, and recoverable amount. Lower of carrying amount and fair value less cost to sell. Lower of carrying amount and the amount which would have been had the asset never been classified as held for sale. Recoverable amount to recoverable amount to हमें पता है, recoverable amount तो होगा. So either it will be A or B. C or D तो नहीं है. What is the right answer?
Option A, sir.
Yes, sir.
A is the right answer. Lower of carrying amount which would have been, आपको compute करना पड़ेगा, had the asset never been classified as held for sale, and recoverable amount, right? So A is the right answer. And this is your favorite slide. So friends, let me summarize the entire discussion and let's discuss one or two questions and then I will conclude the session. Friends, today we have discussed that if an asset which is classified as held for sale or a disposal group classified as held for sale, we have to compute the carrying value as per the respective standard immediately before classification is held for sale, and we need to compute fair value less cost to sell on the classification date, and whatever is lower we need to take that value as a NCHFS or DGHFS. If it is a NCHFS and the fair value less cost to sell is lower, the differential will go to impairment loss in the P&L. If it is DGHFS, there is an impairment loss on this DGHFS, on this group. This impairment loss has to be allocated like a cash generating unit. And if there is an impairment loss and goodwill is there, so first of all, goodwill has to be written off. If the remaining balance of impairment loss is there, it has to be allocated in the ratio of the revised carrying value of the asset on a pro rata basis. You need to ensure that if an asset is already at a recoverable value, you need not to allocate the impairment loss on that particular asset. Okay. Then we discussed whenever there is a change in plan of sale of the asset, in that case, you need to remeasure the asset at lower of what would have been the carrying value had the asset never been classified as held for sale, and what is the recoverable value. Friends, the one mistake which most of the students will do in the exam, while calculating the carrying value had the asset never been classified as held for sale, they always miss to include the impairment loss, right? For example, when it was become a held for sale, when you were computing the carrying value as per Ind AS 16, there was an impairment loss also. So people used to skip that. And what they do, cost is 5 lakh. So life was 20 or 25,000 is depreciation. So this asset was classified as held for sale 1 year ago. Okay, it means I need to reduce 25,000. Answer is no. When you have computed the carrying value as per Ind AS 16, okay, that value will become the opening value. Compute the revised depreciation on the basis of that value divided by remaining useful life. Okay, so that depreciation you need to reduce from the value which you have arrived at in the last year when it was a held for sale. So reduce that carrying value, reduce this depreciation from that carrying value, and you have arrived at a carrying value that would have been had the asset never been classified as held for sale. Correct? Right? And then you need to compare with the recoverable value. Friends, what is a discontinued operation? Discontinued operation is like a component of the entity for which the entity can distinguish this component segment separate from the financial reporting and cash flow purposes. Okay. So friends, in case of discontinued operations, it is more like a discontinuation of a major line of product or a geographical area of operations. This discontinued operation is like a subsidiary which is acquired exclusively with a view to resell. in case of a discontinued operation, the result of discontinued operation has to be disclosed separately, right? So for example, the results can be disclosed in the notes to accounts, and in the main P&L, you can say what is my profit from discontinued operation, what is my tax, and what is my PAT. And likewise, the OCI item you need to also club with the discontinued operations and continued operations. And you need to disclose the earnings per share for continued operation, discontinued operation, and both the operation. Friends, all the discontinued operation does not necessarily includes disposal group, right? If the group of assets are available for sale, then it will be disposal group, otherwise not. This is what we have learned and we have discussed, right? So let's do one question from TYK, test your knowledge. And where is the ICAI study material? So let me use that study material and solve some question. Yes, you have a question, Pooja. Please go ahead.
Sir, it's from example number 14 of the model, page number
Example
6.
number 14. Okay, let me go to the example. Let me open the study module. I don't know why it has been closed. Just a minute. Just a minute. Let me share that. I don't know why it is not opening. Yes. Example number 14, right?
जी.
Classification as asset held for sale, right? This is the example.
Yes, sir.
A
सर
limited.
इसमें बताया था सर कि क्लासिफिकेशन होने से पहले उन्होंने कुछ अमाउंट्स दी थी, जो 16,000 की असेट्स थी वो 14,900 पे उन्होंने उनकी रिवैल्यूएशन अमाउंट बताई है, कैरिंग वैल्यू. तो इसमें जो ये इम्पेयरमेंट लॉस नहीं है, ऐसा उनका कहना है कि ये जो डिक्रीज हुई है 1100 की, वो इम्पेयरमेंट लॉस नहीं है, ऐसा वो बोल रहे हैं. तो
So
why
let
this is so?
me read this example. A Limited acquired a property for rupees 2 lakh. Okay. After few years, the cumulative appreciation on the property of rupees 80,000 is recognized, and subsequently the property is classified as held for sale. So what is the carrying value? 2 lakh minus 80, 1,20,000. At the time of classification as held for sale, it will be measured at lower of carrying value, which is 120, and fair value less cost to sell, which is 1 lakh. So 20,000 is again.
So it's my mistake. It's actually question number 15.
So let me complete example 14, then I will complete example 15. Okay. So, and fair value less cost to sell is estimated at 1 lakh. Accordingly, there is a write down on initial classification of PP, property held for sale, and accordingly the property is carried at 1 lakh rupees. A loss of 20,000 is recognized in profit or loss. On the next reporting date, the property fair value less cost to sell is estimated at 85,000. So 120 and 1 lakh, whatever is lower, 1 lakh is lower. So it has been stated at 1 lakh. Again, it has gone down to 85. So again, you need to recognize a loss of 15,000. Subsequently, the property is sold for 90,000. So the value become 85, carrying value is 85, sold at 90. So 5,000 rupees gain has to be recognized. Anila, you remember in Hindalco, there was a gain, but there was an income tax benefit, right? So the same scenario is there. The gain of 5,000 is there when you compare with 85, but actually the carrying value was 120, right? Carrying value तो 120 थी ना, cost minus depreciation, बाकी सब तो impairment है.
Yes, sir.
Example number 15. Example number 15. Disposal group classified as held for sale. Carrying amount at the reporting date before classification is held for sale. Goodwill. Okay. 1,500. PP carried at revalued amounts. PP carried at revalued amounts, मतलब PP का रिवैल्यूएशन मॉडल यूज हो रहा है. ओके, मतलब PP फेयर वैल्यू पे है. 4600 4000. Building carried at cost 5700 5700. Inventory, investment in equity instrument, financial asset. So the revised carrying value is 14,900. Okay, the revised carrying value is 14,900. So these were the carrying amount before classification is held for sale, and these are the carrying amount as remeasured immediately before classification is held for sale. Okay. So what is the step number one? Step number one is 14,900. So this 1100 is as per the respective Ind AS. Okay. So this in difference of 1100 reflects the entity should recognize the loss of 1100 in accordance with applicable Ind AS. The difference of 1100 reflects routine accounting entries like revaluation. This amount shall not be considered as an impairment loss. Why it is saying that? Why it is saying that? Let me tell you. So Pooja, in this case, this PP has to be made. This PP has been measured at revalued amount. It means probably there was a revaluation surplus also. If a company has opted for a revaluation model, the increase or decrease will be considered as a revaluation adjustments, right? So this 11 out of this 1100, 600 impairment is there on the PP. So this 600 would have adjusted with the impairment. This 600 would have adjusted with the revaluation surplus which was available at that point of time, right? वो हमें पता नहीं है ना. Standard ये कह रहा है, this question is saying that whatever volatility is there in due to the revaluation model, it is a revaluation adjustment. It is not an impairment loss. What does it mean? It means that probably this impairment, this decrease in value might have been adjusted with the revaluation surplus. This is what this question is saying, right? Okay. So, but we need to compute the revised carrying value. Step number one is 14,900. Now, the step number two, fair value less cost to sell is 13,000. So 1,900 is your impairment loss. Since the entity has classified the disposal group as held for sale, it has to be measured at lower of carrying value and fair value less cost to sell, which comes to 13,000. So 1,900 is the impairment loss on the disposal group, right? So the inventory and investment is remeasured as per Ind AS 2 and Ind AS 109. Okay. So on these assets, there is no impairment loss. This 1,900 impairment loss has to be allocated in the remaining assets. Which assets? Out of 1,900, 1,500 goes to goodwill. Remaining 400 goes to which asset? Remaining 400 goes to which asset? Property and building. This will go to property and building. Okay. Correct? This 1,900 has to be allocated to the property and building. Fine. So वहां पर वो ये कहना चाहता है कि this is not considered as a impairment loss. This has to be considered as a revaluation adjustment, right? So उसमें भी impairment loss होगा. Impairment loss तो होगा, but it has to be adjusted from the available revaluation surplus. You remember मैंने एक word use किया था. I have used the word when an asset has been classified as a non-current asset held for sale, and subsequently it has to be measured at fair value less cost to sell, right? When the fair value less cost to sell has been increased, right? The asset, so the increase has to be taken only to the extent of unadjusted cumulative impairment losses. मैंने ये word use किया था unadjusted last class में.
Yes, sir.
What is meant by unadjusted? Means if there is a impairment loss and the asset was valued at revaluation model when it was PPE as per Ind AS 60, right? And that impairment was already adjusted as per the revaluation surplus available, तब आपको फिर वो impairment consider नहीं करना अपनी fair value less cost to sell को increase करने के लिए, right? अब समझ आया या नहीं आया पूजा?
Yes, sir.
तो ये
I was
वो
taking
बोलना,
that 600 also in the maximum reversal limit.
तो ये वो बोलना चाहता है कि ये रिवैल्यूएशन मॉडल है, इसीलिए इट विल नॉट बी कंसिडर्ड एज अ नॉर्मल इम्पेयरमेंट, राइट? फ्रेंड्स, डू यू हैव क्वेश्चन? एनी क्वेश्चन फर्दर? डू यू हैव एनी क्वेश्चन फर्दर? Let me take one more question and then I will conclude this session. On 1st March 2001, entity R decided to sell one of its factory. Entity R decided to sell one of its factory. Okay. An agent is appointed and the factory is actively marketed. मतलब highly probable वाला है सब. As on 31st March, it is expected that the factory will be sold by 28th February 2002. On 31st March, it is expected that it is sold by 28th February 2002, means next 11 months. However, in May 2001, the market price of the factory deteriorated. In May, entity R believed that market would recover and thus did not reduce the price of the factory. The company's accounts are authorized for issue on 26 June. Recommend whether the factory should be shown as held for sale as on 31st March 2001 or not. Tell me whether this factory is available for sale or it is not available for sale. Tell me.
Not available, sir.
Why?
The price should be reasonable. The third point, once they decide to sell.
But when it was classified as held for sale, the price was reasonable at that point of time.
But before reporting, they came to know that, so they have to disclose at least.
Before reporting or before approval? Before reporting or before approval of the financial statement?
Approval, sir.
Before approval of the financial statement, they got to know that the market has been deteriorated and whatever price they are asking, this is not the price, right? This is not the price. Okay. So, क्या करें? Asset held for sale दिखाएं या ना दिखाएं?
As on the reporting date, conditions existed for active market.
Disclosure will be required, sir, regarding the price.
Asset held for sale दिखाएं या ना दिखाएं?
We will show, but the disclosure will be given that the price has been deteriorated.
You are right, absolutely right. First of all, whether it is an adjusting event or it is a non-adjusting event, Ind AS 10 says that if the evidence of condition is available on the reporting date, then it is an adjusting event. If evidence of condition arise after balance sheet date, it is a non-adjusting event. Whether market was deteriorated on the reporting date or after reporting date. The market was deteriorated after reporting date, correct? After reporting date. So it is an adjusting event or non-adjusting event?
Non-adjusted.
Non-adjusting event. And hence, the property has to be classified as held for sale on the reporting date, but the suitable disclosure is required to be made in the notes to accounts, right? It is a non-adjusting event. It is a non-adjusting event, okay? It is a non-adjusting event. Fine. Is that fine, friends? Any question? If you don't have any question, we will be happy to conclude the session because, yeah.
We discussed an example with regards to abandonment in large trust. Could you go to that one, sir?
Which example?
Sorry, I'm not.
Okay, so let me discuss an example from study material, okay? For the amendment asset, right? Example number 12. Can I read this example number 12?
14, sir.
In February 2002, PQR Limited decided to abandon all of its coal mines, which constitute a major line of business. All work stops at the coal mines during the year ended 31st March 2002. In the financial statement for the year ended 31st March 2001, results and cash flows of the coal mines are treated as a continuing operations. In the financial statement for the year ended 31st March 2, the result of the cash flow of the coal mines are treated as a discontinued operations. And PQR Limited is required to make the disclosure as per Ind AS 105. Right? So in this example, the point is whether these assets will be classified as held for sale. This asset will not be classified as held for sale. They have stopped the work. They have discontinued the operations, right? So it will be discontinued operation. It will not be a held for sale asset. Okay. Another example. Example number 13. entity ceases to use a manufacturing plant, factory, because demand has declined. However, the factory is maintained in a workable condition and is expected to be brought back into use in future when demand picks up. It is neither be treated as abandoned asset nor to be treated as held for sale because its carrying amount, it's like an it is wrongly written here. It is like a temporary asset which is taken out of active use. It is like a abandoned asset. Okay, it is neither to be treated as held for sale. It is to be treated as an abandoned asset. Okay, because its carrying amount will be principally recovered through a continuous use. Therefore, entity will not stop charging the depreciation. Right? Why? The entity will not stop charging the depreciation. Entity will continue to charge the depreciation because this asset is available for use. The only thing is entity is not using the asset. Why? Because the demand has declined. So this asset will be treated as an abandoned asset, not the held for sale asset. Okay.
Yes,
Correct?
because it says it's needed to be treated as abandoned, because when in our discussion we discussed that it would be treated as an abandoned asset.
Yeah. So abandoned asset मतलब छोड़ा हुआ asset, abandon कर दिया. It is not a held for sale, it is abandoned. Okay. Correct?
Yes, sir.
If you see, non-current asset that need to be abandoned will not qualify to classify as held for sale. If you see the heading. What is the concept? Right? So non-current asset or disposal group that need to be abandoned, they have been left, they have been kept idle for some time. Okay, it is not available for sale and hence it is not qualify as held for sale. However, if the disposal group to be abandoned, it meet the criteria of discontinued operation. आप revenue तो generate नहीं कर पा रहे ना उससे. Correct? So a abandoned disposal group may meet the criteria of discontinued operations. क्योंकि discontinued operations में not necessarily it is held for sale. You have to reflect the result that since you are not using the plant is there, you are not using the plant and hence you are not having the revenue and cost for that plant. Correct? Clear hai? Clear hai ya clear hai? If it is not clear, I can repeat it again. Friends, an abandoned non-current asset will never classify the criteria of held for sale. But an abandoned disposal group held for sale may satisfy the criteria of discontinued operation. That is not a disposal group held for sale. That is a discontinued operation. क्योंकि discontinued operations में आपको सिर्फ disclosures करने पड़ते हैं, presentation करनी पड़ती है. Sir, if a discontinued operation will not be a disposal group held for sale, in that case, whether that impairment loss on account of remeasurement at fair value less cost to sell will come, it will not come. Why? आप तो सेल ही नहीं कर रहे ना. It is not for sale ना, so it will not come. Right, friends? समझ आया या नहीं आया?
आया सर.
आया? Very good.
समझ आया.
समझ आया. Okay. So thank you, friends. If you don't have any question, so I would be happy to call out the session. Thank you so much. Have a good day. Have a great day. Just do your revisions. Read the standards carefully. Read the concepts carefully. Okay. Thank you so much. Bye-bye. Take care.
Thank you, sir. Thank you, Ashok.
Ashok ji, session is over.